Welcome back to Ticker Trader News Daily. Today's spotlight: Coca-Cola, Visa, Procter Gamble, and Johnson & Johnson. Right off the top, these aren't momentum trades. These are infrastructure-level businesses for daily life and the global economy. When markets get selective, capital doesn't chase stories. It moves into systems people and institutions rely on every single day. These four companies collectively reach billions of consumers daily, move trillions of dollars in payments annually, and generate hundreds of billions in recurring global revenue across consumer goods, healthcare, and financial networks. Coca-Cola, the global consumption engine. Signal, stable leadership/low churn. Technical view, trend, price holding above rising 50-day and 200-day moving averages. Momentum, RSI 50-60 neutral to positive. Levels, support near 20 to 50 DMA cluster, resistance at prior swing highs. This is defensive leader with room to grind higher in selective markets. Think of Coca-Cola as a distribution empire, not just a beverage brand. KO operates in over 200 countries, serves 2+ billion drinks per day, and runs one of the most powerful logistics and branding systems ever built. Why holds up in uncertain markets? Habit-driven, repeat demand, strong global brand recognition, pricing power during inflationary periods, consistent free cash flow, dividend growth record spanning 60+ years. This is a business that doesn't need a perfect economy. It just needs people to keep living their daily routines. Visa, the financial toll road. Signal, persistent leadership within financial infrastructure. Technical view, trend, long-term uptrend intact above 200-day MA momentum. RSI mid-50s constructed consolidation. Levels, break and hold above recent range, high signals continuation. It is quality growth base forming for next leg. Now think of Visa as the digital highway of global commerce. Visa processes trillions of dollars in transactions every year, touching retail, travel, e-commerce, and business payments, without taking on consumer credit risk. Why long-term capital gravitates here? Growth tied to digital payments adoption, benefits from global transaction volume and pricing expansion, minimal balance sheet exposure compared to banks, network effects across 200+ markets. If money moves, Visa earns a toll. Procter Gamble, the quiet cash flow machine. Signal, defensive persistence/low volatility cohort. Technical view, trend, sideways to up channel with strong 200-day MA support. Momentum, RSI near 50, balanced. Levels, support at channel lows, resistance at upper range ceiling. Our opinion, buy dips, avoid chasing breakouts. Procter & Gamble owns some of the most trusted household brands in the world, including Tide, Pampers, Gillette, Crest, Dawn, and Head & Shoulders. PG operates in nearly every consumer essentials category globally, generating tens of billions of dollars annually from products people restock, not rethink. Why it remains resilient? Non-discretionary, everyday demand, strong pricing leverage with retailers, global manufacturing and supply chains, dividend history exceeding 60 years. This is a company built on repeat behavior, not economic optimism. Johnson & Johnson, the healthcare backbone. Signal, healthcare anchor/institutional core. Technical view, trend, base building above 200-day MA momentum. RSI 45-55, neutral stabilization. Levels, support at base lows, resistance near descending trendline. Our read, defensive rebound candidate if healthcare rotation continues. Johnson & Johnson is one of the most diversified healthcare companies in the world, operating across pharmaceuticals, medical devices, global healthcare systems. Its products and treatments are embedded in hospitals and clinics across 100+ countries. Why it attracts defensive capital? Non-cyclical healthcare demand, deep research and development pipeline, global regulatory footprint, long-term institutional ownership, dividend growth record spanning 6 decades. When people need care, the system doesn't pause from market cycles. Combined verdict, these are anchors, not weapons. Coca-Cola, Visa, Procter & Gamble, and Johnson & Johnson form a probability-first defensive core designed to stabilize portfolios, reduce emotional decision-making, deliver steady performance across market cycles. Use them as a foundation, then layer higher growth exposure on top. That's it for today's short briefing. Stay focused, Stay disciplined and remember, the strongest portfolios aren't built on predictions. They're built on durability. Disclaimer: this podcast is for informational and educational purposes only. It is not financial advice. Investing carries risks, including possible loss of capital. Always do your own research or consult a licensed financial advisor before making investment decisions.